Hi, and welcome to this analysis of Royal Unibrew. What is actually Royal Unibrew? Royal Unibrew is a company that is set in the defensive segment. They are producing alcohol, juice, and they're also one of the main distributors of Pepsi. They have premium brands across all of EU. The fact that they have premium brands more or less means that no matter what kind of market situation, people will still continue to buy them. And in general, I feel like they have done a fairly good job in 2022 based on what I've been expected. So some of the things that Royal Unibrew is having, it spans from water, soft drinks, alcohol, and juice. And that is some of the main products areas, and they have premium brands like, for example, Fox, Larch, Places, Mangali, and Nordlund. Other than that, they do actually have a yearly dividend, so if you're a dividend investor, it might be an interesting stock. So how was 2022 for Royal Unibrew? Well, they gave a dividend at 2.9% at the current evaluation, of course. So it was about 1.9% earlier, perhaps 2.1. It has fallen quite a lot, as you can see here. Prices have created some issues for them. So yeah, they have fallen with 32.8% evaluation. Of course, for Swedish or Norwegian customers, this might not have been experienced as a problem because of the hedging effect in the krona. They have a price to earning at 16. Not the cheapest stock. Is like it has already fallen. It has a lot of alcohol, and a lot of European countries are drinking less alcohol. So it's a little bit scary that way, but historically the price to earning have been fairly high and it is looking okay, and it has reduced its margins. This is expected due to grain prices have increased a lot. Main producers of grain is basically Ukraine and Russia, and well, that is different now. So they have also gotten some acquisitions. One of them is the Toronto-based company, Amsterdam Brewery. They have also finished purchase of Hansa, a Norwegian brewery. They have also improved their partnership with PepsiCo, and from January 23, they will take over responsibility on a license basis, the beverage portfolio on the border between Denmark and Germany. Should also be announced that Danone and Royal Unibrew have agreed not to complete the contemplated sale of Aqua Dior. So when we have come to the statement now, you can see that the revenue have a low growth. It's actually below 50%, which is, well, one of the worst we have seen yet. It has gone from 6,000 in 2014 to around 8,600 or 8,700 in 2021. And they have been able to improve their margin quite a lot. It's almost doubled. It should be mentioned that the reason I'm using EBIT margin this time is in 2022, they did have a one-off in Q2 that makes their regular margin, not the EBIT margin, look a lot better than what it actually is. They had a one-off and it gave them quite improvement in the statement there. And they have managed to double their results. This is, of course, based on the ability to improve their margin and also increasing their revenue a little bit. They have done a fairly good job when it comes to doubling the dividend. You can see that it's gone from 6, close to 7 kroners to a little bit over 14 kroners. And they have also more than doubled their earnings per share. So this shows you as an investor that this company is giving you as a shareholder back what they earn. So first and foremost, they are improving the dividend. With the current evaluation, it's close to 3%. And they also are buying back shares quite consistently. So, when it comes to the balance, you can see that they have managed to double their debt since 2014 to 2022, even a little bit more. Personally, I'm not a big fan of it, but they have done it. And unfortunately, if you base it with a statement, they have managed to increase the statement a little bit with over 50%. And here they come and double their liabilities. I would like to mention that the short-term debt and long-term debt here is interest-bearing, and they don't really have any leases to mention. They do, however, manage to improve their equity. It has almost doubled, but not doubled. So obviously, they are taking a little bit more debt than actual increase in equity. I would say that their liquidity is good. In Q3 right now, they have 176 million cash at hand. So I would say that is an acceptable liquidity. It's not the highest historically for them, but it's still a lot of cash at hand. And then it comes to the fact that they do have a somewhat unhealthy balance. It is a downward trend in the debt to equity. Together, you can see it's like just since last year, it is doubling in short-term debt. It should be mentioned that this type of debt is often paid down with their cash flow, which is fairly strong, but still, it is something to notice. And when it comes to the cash flow, you can see that it's more or less doubled since 2014, with a few nicks and struggles here and there, of course, especially 2016 as an example. And you can also see now in 2022 Q3 that it is lower than normal, but it is an expensive year for Royal Unibrew, so that is a little bit expected. You can see that they have managed to double their dividend, more or less. So based on that, they are doing a really good job. And you can see that actually they're using less than 50% on the dividend. So based on that, they do actually have the potential to provide more dividend if they feel like they have grown enough, those kind of things. And that might provide a decent dividend in the future. Like right now, it was close to 3%. Another thing that I would like to mention is that their investments are more or less unstable. You see low, a little bit up, right? And then it's like 2018 and 2021 increased exponentially. So this is something that they have started doing a little bit more, buying up companies. Take the companies they went in for in 2021. They're using a little bit more money on that, and it seems like they are positive to doing that. They have gone in the presentation. In Royal Unibrew's presentation, they say that they are very pleased with the growth that they have gotten from their acquisitions, and this is something that they would like to continue with. They do, though, have quite a good control over their general cash flow, everything from cash flow to finance. So when their investments are being paid up, they normally do use a little bit more money on the finances afterwards. So they do focus a little bit on paying back their debt. You can see that if we go back to the other slide, right? You can see in 2018, it was going up again, and then it's like they slowly do pay down a little bit. You can see the lowest debt to equity here was in 2020. Of course, not if you compare to 16, but yeah. So you can see the downward trend before they bought up again, and it's going down. In general, I would say that the cash flow do look straightforward, and I don't really have a lot of things to say on it in negative form. So what are the downsides of Royal Unibrew? Well, they do have high liabilities. This indicates that they have high debt and they have a little bit less security in the stock. They do also have an unhealthy balance, and this is shown with the fact that the debt to equity is higher now in 2022 than in 2014, for example. So it's just something to be wary about when it comes to the stock. You as an investor should always keep a little bit track of what the share is doing, the company wants to do in the future, and if they just continue to increase their debt, that increases the risk you are experiencing as an investor. They are also in a decreasing customer segment. For example, Germany is buying less beer now than what they did a few years ago. So this indicates that it will be more difficult to keep increasing trend when it comes to their portfolio and what they're selling. To be fair, if you read their presentation, they are saying that a lot of their key brands are improving their sales, but it's just something to keep it notice of. How is the next generation going to be? Are they going to buy more or less drinks? It's just things to consider. They also have been quite impacted by their raw materials. Royal Unibrew sells a lot of beer, for example, and they need a lot of grain for that. Who's the main grain producers that is selling to Europe? Well, it's Russia and Ukraine. It's a little bit difficult right now. They are also historically quite expensive. You have periods where you don't find them extremely high, and right now they are around 16.6 PE. Not the cheapest, honestly, with only 50% increase in revenue, but it is a little bit of expenses in there. Will they be able to improve their margins as they have done historically to be able to continue with the growth in results? Well, we will see. And they have had a low growth since 2014, at least in the revenue side. Both the result and cash flow have been good, but when it comes to the revenue, I'm very disappointed. And the fact that they do say that they're very pleased with their acquisitions and how their growth strategy is working, well, the top line isn't improving enough, I would say. And okay, 2022 looks good. The acquisitions of 21 looks to be doing their jobs, but yeah, it's just a little bit scary for me. So, what are the benefits of Royal Unibrew? Well, honestly, I feel that they are very shareholder friendly. So if you add in the fact that they're giving away around 40% dividend, that is not that high, and they're able to grow it at 50% and still keeping that up, together with the fact that their earning per share is more than doubled when their results is doubled, it indicates that they do actually use a lot of money for you, the investor. So going into Royal Unibrew, you know that they will think more about the owners. They do have a good and stable cash flow. I do actually like the growth that they have been able to create there. I do like that it's very often nice, stable increase in it. and they do have a healthy statement. Of course, 2022 is a little bit rough for them. The margins is falling, but it's healthy. Historically, it's been improving margins and it's been improving the results, and their earning per share is improving well enough as well. They have an acquisition-based growth form, and they do normally use it to buy up premium brands. So when they're going into a country, like for example Hansa is a premium brand in Norway. Most people are familiar with it, and it has a good reputation. And they are, of course, spread over Europe. They are, for example, having several premium brands in Latvia, France, also in Denmark, of course. And now they are going into Norway and also in, for example, Canada. So they are continuing to spread around. And when it comes to the defensive segment, like personally, I feel like what they're doing is in the defensive segment. So people normally do want some alcohol, they do want water, they do want sports drinks, and they do want juice. All of this is things that are normally not switched away during difficult times. It makes the stock more or less defensive. So Royal Unibrew going forward, they will improve their margins again, like the fall in 2022. Now I hope that this will not be their end result. They have been able to improve their margins steadily, and I do believe that they will go back on track when the war is over or things are calming down a little bit. They will continue to invest and buy premium and key brands forward to grow. And hopefully they will be able to fight the trends of lower alcohol consumption and be able to grow and focus on the current key brands they have. To be fair, their presentation did already said that they are actually increasing their sales on their key brands, so they're already doing a decent job there, but I hope that it continues. I also do notice that the distribution brands, for example PepsiCo, have provided them a little bit more work to do, and I do hope this also continues further, and also that the Heineken distribution that is going on as well will provide them with more benefits. So here it's the disclaimer time. So I would like to say that this is not really financial advice for anyone to buy or sell Royal Unibrew, but I do hope that this provides you with a little bit of information about a company that you're interested in or you like, just to get a little bit more familiar with what they are doing, and some of their weaknesses. If you have some thoughts about the video, leave a comment, and if you like it, leave a like. I would appreciate it. Other than that, cheers.